As we move into 2024, the rising interest rates are significantly reshaping the car buying experience, with consumers facing a more challenging financial landscape than in recent years. The Federal Reserve has implemented a series of rate hikes in response to inflationary pressures, and as a result, car buyers are seeing higher financing costs, which are influencing both the decision-making process and the overall affordability of vehicles. Interest rates on auto loans, which had been at historically low levels during the pandemic, have now climbed, making monthly payments for new and used cars considerably more expensive. For many potential buyers, this means that what they could have comfortably afforded just a year or two ago is now out of reach, or at least requires sacrifices elsewhere in their budgets. This shift has led to a reduction in purchasing power, causing many consumers to reconsider their plans to buy new cars and instead look at used vehicles, which, although more affordable in terms of sticker price, are still feeling the effects of inflation, keeping prices high. The impact of higher interest rates is not just limited to buyers with subprime credit scores. Even those with excellent credit are facing loan terms that are far less favorable than in previous years. Additionally, as the cost of borrowing rises, car buyers are likely to hold on to their current vehicles for longer, potentially leading to a slowdown in car sales overall. For dealerships, this means that attracting customers has become more challenging, as the typical buyer is more cautious about committing to large purchases in an environment where financial uncertainty is high. To adapt, many dealerships have begun offering more attractive leasing options, as leasing may be a more viable alternative for buyers facing higher monthly payments on loans. Leasing allows consumers to drive new vehicles with lower upfront costs and reduced monthly payments, although this comes with its own set of considerations, such as mileage limits and the need to return the car at the end of the lease term. Additionally, some automakers are introducing or enhancing financing programs to help mitigate the impact of higher interest rates, offering incentives like cash rebates, 0% financing for well-qualified buyers, or long-term financing options, which can help spread out the cost of the vehicle over a longer period. However, even with these incentives, many consumers are finding themselves rethinking their car buying priorities, with an increasing number opting for more budget-friendly options, such as compact cars, electric vehicles with lower price points, or certified pre-owned vehicles, rather than splurging on high-end models or luxury cars. These shifts in buying behavior are also being influenced by changes in consumer preferences and the growing importance of sustainability. The electric vehicle (EV) market, for example, has been gaining traction as an alternative to traditional gas-powered cars, and the rising cost of fuel, combined with government incentives and rebates, is pushing more buyers to explore EV options. Yet, even with the long-term cost savings that EVs can offer, the higher interest rates make financing these vehicles a bit more expensive than before, which may dissuade some buyers from making the switch. On the flip side, some buyers are taking advantage of the current situation by opting for larger, more expensive vehicles, such as trucks and SUVs, especially those that offer better fuel efficiency or electric options. This is a notable trend in certain parts of the country where outdoor activities and road trips remain popular. As interest rates continue to influence both the consumer mindset and the broader economy, the car buying experience in 2024 is evolving into a more calculated and cautious process. Buyers are increasingly weighing their options, considering not only the sticker price, but also the long-term financial impact of higher interest rates, fluctuating fuel prices, and the total cost of ownership. Car manufacturers and dealerships must adapt by offering more flexible financing solutions, attractive incentives, and emphasizing the value proposition of their vehicles in a way that resonates with cost-conscious consumers. For buyers, the process is becoming less about upgrading to a new model on a whim, and more about carefully evaluating whether a purchase aligns with both their current needs and their long-term financial goals. The overall result is a more cautious and strategic approach to car buying in 2024, with higher interest rates playing a pivotal role in shaping both consumer behavior and the automotive market itself.